Mortgage rates continued dropping last week, but technically they're still in an uptrend and have been since the beginning of February. When will the uptrend break? For the last 2 years, any time rates move lower with any duration, even just 1 week where they barely move down like we saw last week, we see an increase in the number of people applying for mortgages. So it's not going to take much for this housing market to get out of control again. Every tiny drop in rates brings in more buyers. And already, every resale home here I'm offering on has multiple offers. And new construction communities are starting to limit their inventory because they are selling too quickly. More on this in a minute. Housing inventory is still growing, though the growth is slowing. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part of the video, the top 10 ranked charts of the hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is May 13th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here. It'll take you to the latest weekly market update. First up is market news. The Dallas housing market is way hotter than you would think if you're just browsing Zillow or looking at new construction websites. I toured a community with an investor this weekend, and in this community, they were expecting to be selling 8 homes a month. Instead, for the last 2 months, they've been selling 20 homes. As a result, corporate just cut their available to sell inventory literally in half. And that's where it will remain for the foreseeable future. And there are other communities that are already on wait lists, meaning even though you'll see a bunch of homes listed online on that community's website, the agents at the communities are not allowed to write any more contracts until next month. And then next month they'll say you can write X amount of contracts, and they'll just start calling everyone on the wait list in order of when they signed up. And let's say next month they're allowed to sell 8 homes. Well, the first 8 people they called a contract, that's it for the month. Then the wait list transfers to the following month. So that's why I'm saying if you're looking online and you see all this available inventory, it may not be true. And things can change very quickly, like that community I toured this weekend. The day before when I had called, they had way more houses available to sell. Then when we went in the next day, he had just gotten a letter from corporate and half of their inventory they can't sell. Just like that. And I expect this trend is going to continue and even accelerate as we get into the summer months. As we covered last week, we have all of the beginning signs that the labor market is softening, and the only thing left for rates to drop is for the unemployment numbers to start increasing. That's it. And the signs are there that it's coming. If unemployment starts rising now, which means rates start dropping through the summer, you'll have both the seasonal demand of all the people wanting to move in the summer before the next school year, plus all the pent-up demand that's been sitting on the sidelines waiting for lower rates. So if you decide to wait until either rates drop and or the summer market gets hotter, you're probably going to be on a wait list, or at the very least, you'll just have way less options to choose from than if you were to buy now. And I am completely serious about this because it happens every year. If you're hoping to move before the next school year starts and you're waiting until the summer to buy, you're basically going to be walking into these communities and saying, I will just take whatever you have left. That's the reality of how it goes. So this is how it's been for most of the communities I've been touring lately. Even though mortgage rates are still well above 7%. This is why I'm saying it is not going to take much for the housing market to get out of control again. So I'm telling you this way ahead of time, so there's no surprises for you. If you are planning to wait a few months to buy a house in the summer because you're looking online and it looks like all this inventory is stacking up and you're going to have tons of options to choose from, that's simply not the case. And lastly, I want to explain, why would these communities stop selling houses to people? Wouldn't they be happy that they're selling fast and just want to sell everything they can? One reason is they have huge operations. They have construction managers, they have sales staff, and they have to time exactly when and where they're going to continue moving all of these people around. So if they thought it was going to take them 8 years to sell through this community, but they were only to sell through it in 3 years, that is going to be a logistical nightmare for this company. And another and perhaps bigger reason is that everyone in the world knows eventually rates are going to drop. Once rates drop, 2 huge things are going to happen for these builders. One, prices are going to go up. They will get to sell each one of these houses for more money. 2, they'll get to reduce their incentives because they won't have to spend $15 to $30K buying down the rate for these buyers every time. So if you combine these 2 things right out the gate once rates drop, they're going to be making $50K more easily on each house. And this could happen in just a matter of months. And most of these builders paid cash for that land that they have, and they've been sitting on it years already. They got it way cheaper already than they would sell it for today. So they're already way in profit. But land is in limited supply. They're not making any more of it. So if it were you, would you sell all of your lots today for $50K when 6 months from now you might be able to sell them for $100K? No, you would not. And neither will these builders. Okay, moving on, let's start with national housing inventory. Okay, this week we had an increase of just 8,727 homes for sale in the US, which gets us up to a total inventory of 568,471 homes for sale in the country. For reference, the all-time inventory bottom back here in 2022, we only had 240,000 homes for sale in the entire country. The peak of last year, 2023, we had 570,000 homes for sale. So we're almost already to the peak of 2023's numbers. So that's the good news. And then of course, the same week in 2015, we had over 1 million homes for sale. And you can see that around here in 17, 18, 19 before COVID. We get up to 1 million, let's call it high 900s to 1 million. So we're up more than double from the bottom, the absolute bottom in 2022, but we're still barely just over halfway to where we need to be. So we're right in the middle of these two. This is post-COVID, this is pre-COVID, and we're trying to get back to pre-COVID. So we're still nowhere near where we need to be, but we are doing way better than the last few years. Now let's look at new listings. Basically all year we've been tracking pretty close to 2022's numbers. That's this light red line. You can see the last few weeks we've been below, and actually this week we had 4,264 less homes listed than the corresponding week in 2022. Again, the good news is we are well above 2023's numbers, which was horrible. There was no new listings growth last year. So good news, we're above that. Bad news is we are still sinking below 2022's numbers, and in reality we need to be higher than 2022's numbers to get back to normal inventory. So to get out of this shortage, step one, we need to be above 2022's weekly new listings numbers, but also we need to have higher days on market, giving inventory time to stack up, which at least that side is kind of happening thanks to these higher rates. So we have half of the puzzle, which is maybe why we're only halfway back to a normal inventory. And remember, the minute that rates drop, this inventory is going to get eaten up. Too many buyers are going to come back into the market. So it's kind of a race against the clock, and we are just hoping before rates drop, let's see how much inventory we can stack up. Hopefully we get way closer to those 17, 18, and 19 inventory numbers before rates drop. Then the last thing we cover nationally is the number of homes having price decreases. It's normal every year for a third of homes to have a price decrease. So looking at the national chart, this week we're at 33.7% of homes having a price decrease. Last year we got as high as 39.2, and the year before we got as high as 43.2. This is good news that it's increasing earlier and faster in the year, but 22 and 23 were extremes with low inventory, with too much demand. Prices kept going up. But all you need to know here is it's normal for it to start increasing this time of the year, somewhere around here. It was a little late last year, but again, these years are so much different than normal years because rates are moving way faster than they usually do, as well as our inventory shortage, many reasons. But like I said, we need higher days on market, which means more homes having price decreases, essentially. So it's good news that this is higher than it's been the last 2 years. It's still in a totally normal range. You can expect it to be climbing all the way up until around November. Nothing unusual here. This is the good side of things, showing us that it's helping inventory stack up. All we're looking for here is if this were to start decreasing or sharply going up, we're just looking for some big swing, something totally out of the ordinary. So really all we're looking for in this data is, are things normal or are they weird? And so far they are normal. Okay, moving on to mortgage rates. We started last week at a 7.25, got all the way down to 7.15, ended at a 7.16. Let's see what we're going to do today by looking at the 10-year. All right, looking at the 10-year today, we tried to have a little drop. We opened up a little below where we closed on Friday, actually, so we may expect a slight decrease. It was trying to move down. It hasn't worked. And this is what I mean when I say the 10-year and mortgage rates are still in an uptrend. You can see this is a clear uptrend. It goes up, it touches this line, it touches this line, and it's just continuing. It is not breaking below this. Now, we're right at the bottom of the trend, but we're still in an uptrend for now. Until this breaks, then we'll get a neutral time before it decides if it's going to trend up or down. You can see that here. From October all the way through January, we had a downtrend and rates were getting lower and lower. It broke through that, we had a neutral time, and then from here it decided it was time to uptrend again. So still in an uptrend until this breaks. We'll have a neutral time, then we'll get to see. And really all it's going to take, like I've been saying, unemployment numbers have to start going up. When that happens, for sure, this is going to break. Now, regarding mortgage purchase applications, even with rates just having a very small decline last week, that was enough to give us a 2% increase in the number of people applying for mortgages. However, I want you to see this chart. Okay, this is the mortgage purchase application index. And so far this year, we have had 6 positive, 9 negative, and 2 flat prints. But what I want you to see here is demand is at all-time lows. The number of people applying for mortgages is at all-time lows. You can see the previous 2 years. If you look this week from 2022, we are 36% below, 36% fewer people, 36% less demand than we had this week in 2022. And if we do it from 2023, we are still down about 17%. So what I want you to see is, imagine this market if we had even 17% more buyers than we do right now, because housing prices have still been going up with this record low demand. Supply has still been barely climbing with record low demand. If today 17% more buyers were in the market, what do you think would happen to housing supply? It would go down. What do you think would happen to prices? It would go up. Now just imagine if we had the demand we had in 2022. Imagine if 36% more buyers were in the market today. Prices would be going straight up. This is why I keep saying it will not take much for the housing market to get out of control again. There's not enough inventory yet. Okay, before we move on to the local market data, if you're considering buying a home in the Dallas area in 2024, 2 things. 1, if you want to become a master of home buying, I've released 2 courses. One is for new construction, one is for pre-owned homes, as they are totally different processes. So pick the one that you're most leaning towards, and these courses will literally tell you everything you need to know about the process. So the links for those courses are down in the description. Number 2, I've developed a max affordability calculator. Hundreds of you have already used this, but it will very quickly and easily help you get into the ballpark of how much house you should be looking for today based on today's interest rates as well as your personal financial situation. It'll give you several different options to review, and it takes into account everything all the way down to your income tax bracket. Getting pre-approved is a hassle, especially if you're not even sure you want to buy a house yet. So this calculator is your shortcut to figuring out how much a lender would approve you for today, as well as helping you understand what you should be paying for a mortgage based on your finances. And there's a link below in the description for that calculator as well. Okay, now let's move on to the local markets, starting with Dallas County, looking at the MLS data. We had 549 listings last week. That's 65 less than the previous week. 322 closings. That's 137 less than last week. 84 of the homes closed were immediate sales, meaning they contracted within the first week. That's 50 less than the previous week. 368 went under contract. That's 5 more than last week. In total, there are 2,528 homes either under contract or in pending status. That's 4 less than last week. So last week we had a big spike in housing activity. This week we dropped right back down to about where we were the week before. So last week looks like it was a big spike up anomaly week. Looking at Collin County, 393 new listings, 70 less than last week, 250 closings, 167 less than last week, 118 immediate sales, that's 40 less than last week, 229 went under contract, that's 45 less than last week. In total, there are 2,098 homes either under contract or pending status, that's 56 more than last week. So both Dallas and Collin County consistently had a big jump last week, no idea why, and they fell right back down to their normal usual numbers this week. Okay, let's move on to the Market Action Index. If you've never seen it, the Market Action Index is just this easy to read graphic with a number. It takes into account all of this data. So Dallas County is still a strong seller's market, and everything just looks totally normal here. That's really what we're trying to see here. Do things look normal or do they look weird? As you can see, this time of the year, we're in the middle of May. Prices have been climbing and climbing and climbing. Same with the median price of new listings. Median days on market has remained low at 35. Number of homes having price decreases has kind of stalled out here. Inventory, pretty stagnant. Again, we want to see that going up more this time of year. So as we covered, you saw it climbing in the national market, but as you look at the local market, Dallas County is not having really a climb at all. So all this is showing us, is the market hot? Yes, it absolutely is, which it absolutely should be this time of year. Everything is normal. Now let's look at Collin County. Exact same thing. Median list price has been climbing as we get into the spring market. Same with median price of new listings. Median days on market is even lower over here. It's been at 28 for a while. The number of homes having price increases looks to be slowly curving up again. Again, this is for new construction. So this is somewhere around a third of new construction homes are having a price increase every week, which makes up 7% of the total market. So again, if you're looking for new construction, every single week prices are going up. But actually in Collin County, inventory is starting to decline, and that is not good news. For all of the reasons we've been covering, we need this number going up. So all that we're seeing in Dallas and Collin County is that the market is heating up, as it should be doing this time of year. So now let's move on to the top 10 ranked charts, hottest and coolest cities and zip codes in all of Dallas and Collin County. This is using that same market action index number. And what you need to know, anything a 30 or below is a buyer's market. Anything above a 30, we're asking how much of a seller's market are we in. So you can see when we get to the hottest markets, we're way up there at almost a 66. So what happened this week? Coppell heated up 2 spots to take the number 1 spot. Carrollton remained at number 2. Louisville cooled off 2 spots. It went from number 1 down to number 3. Grapevine remained. Plano heats up 1. Lancaster heats up 1. Ferris cools off 2. Richardson, Garland, and Grand Prairie all remain at 8, 9, and 10. Now let's zoom into specific zip codes. The absolute hottest is Carrollton 75010, followed by Louisville 75067, Irving 75063, Coppell 75019, Carrollton 75007, Louisville 75077, Plano 75075, Garland 75042, Plano 75023, and Richardson 75080. So if you live in any one of these zip codes, you can sell your house for top dollar. Congratulations. Now moving on to the exact same thing, but for the coolest markets, the absolute coolest remains Van Alstyne. It is the only buyer's market. It is a 28.9. Then this week, Lavon cools off 1 to take the number 2 spot. Prosper cools off 2. Blue Ridge cools off 3. Leonard heats up 1. Salina remains. Nevada heats up 5 spots. Rockwall, Farmersville, and Royce City all remain as the hottest cities on the coolest cities list. Now zooming into zip codes, the absolute coolest: Van Alstyne 75495, Dallas 75204, Dallas 75203, Irving 75038, Lavon 75166, Dallas 75205, Prosper 75078, and you can see Prosper has been cooling off. Dallas 75219, Dallas 75212, and Blue Ridge 75424. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description. Thank you for watching. I'll see you in the next video.